All right, Missy, am I all set to get started?
Yes.
Okay, perfect. All right. Hello, everybody. Today we're going to go through the webinar titled Shifting from a Static Budget to a Holistic Business Plan, the Adaptive Insights Report Writer. And I am hosting this webinar. My name is Zachary Griggs. Shift slides. Quick note about JMT Consulting. I've been with JMT for about 7 years, and JMT works exclusively with nonprofits. We have been for close to 30 years at this point. We're also independent. We'll be talking about Adaptive Insights today as our product of choice when it comes to budgeting and forecasting, but ultimately we have many products that we support, and our primary service is serving nonprofits, and we're not tied to a single publisher or a single product. We're really system agnostic. Sorry, I think I went the wrong way. A couple of housekeeping notes. Throughout the presentation, if at any point you have a question or you'd like to see more detail or get more detail on a specific area that I showcase within the product or just general questions, please feel free to submit them through the question box via GoToWebinar. We're going to have somebody monitoring that, and then I'll allow about 10 minutes or so at the end of the call to get through all of those questions. If by chance we run out of time, we will definitely reach back out to you with that answer after, as well as with the follow-up of the recording and the slides from today. Okay. Just a quick run through the agenda. As I mentioned, my name is Zachary Griggs. I've been working with the Adaptive Insights product for about 5 years now, both as an end user, as the Director of Finance at JMT, and currently the Practice Manager and an implementer of the software. So I've been on both ends of the table. I'm very passionate about the value that it brings to nonprofit organizations. There's a lot of our clients that still rely on Excel or tools that don't enable them to be quite as efficient or gain the visibility that they need to make timely and informed decisions. So bringing a tool like Adaptive into their repertoire really enables them access to another level of visibility to make more informed decisions throughout the fiscal year. First I'm going to start off talking about what a static budget is versus a continuous planning model, the differences of the two, and then I'm going to segue into the adaptive product. And I like to do more showing within the product than I do with the slides, so I'll try to get through that first part quickly so that we can see more of the adaptive solution and what it brings to the table. Specifically, we're going to take a look at dashboarding within Adaptive, and then we're going to get into making specific budget modifications in a rolling forecast, and then take a quick look at the HTML report writer that Adaptive offers. And then, of course, we're going to answer any open questions at the end. All right, so the first item I want to talk about is static budgeting. What is that? What is a static budget? Ultimately, static budgeting is the process of developing a single budget version at the start of your fiscal year. It's likely through a tool like Excel, and you rely on those budget figures in your decision-making throughout the year. This is often referenced as a board-approved budget. It gets approved by your board after whatever length of time it took to put that together, and then it doesn't change throughout the next 12 months through the fiscal year, and you're always comparing those same figures against your actuals and how you're trending, but you're not accounting for change in that. Some examples that may happen throughout the fiscal year that could potentially impact your organization but aren't accounted for would be if you had any types of retirements from your staff. Maybe you just had staff leave. You might not receive all the funding that you originally had budgeted for, and both of these are just two examples, but ones that can have tremendous impacts. If you lose staff, your remaining staff are going to be maybe spread too thin, or there's some responsibilities that aren't being picked up from those vacant positions that now exist that you hadn't budgeted for. If you have the insufficient funding through the year, you may have to dip into some of your reserves or your unrestricted funds that you didn't plan on originally, or you have to cancel some budgeted expenditures like a new accounting software that you had planned to implement in that fiscal year, but you no longer can. Those are things that you wouldn't capture in a static budget, because it's not changing as you're making it further along in that fiscal year to account for those changes. The primary reason that most organizations rely on a static budget versus a rolling forecast is going to be due to just not having the time. If you were to rely on Excel or manual processes and sending emails and having meetings with individuals, it takes a lot of time to put together a reforecast in that process. So you might not have the staff available to do that, and therefore it just moves further down the priority list. Sorry. Some contributing factors that can take up a significant amount of time when you're attempting to create a rolling forecast. This is just a few that are included, but there's others in addition. The primary ones are going to be that you may have many disparate systems. Most organizations are going to have a GL system, you can have a CRM system, you can have a fundraising, numerous softwares with very unique detail within them that is being likely managed by different departments, different administrators are owning that detail. And so what that means is that those systems and those individuals need to then take that detail, send it over to finance, and then finance needs to bridge the gap between all that different content and consolidate it into what that means for your budget or your plan. How does the fundraising detail and this list of donors impact my bottom line on what GL accounts need to be adjusted to account for this new fundraising event that we have planned. So putting that all together ends up falling on finance, and it's quite often that there's just not enough time in the day to get to that. In addition to systems, you also have the existence of different departments or entities and locations. So you have to also bridge the gap between those. One department, your marketing department, may look at how their expenditures are being processed on a per event basis, but then your IT department is looking at their expenditures via the number of computers or monitors or keyboards or software downloads, any of those. And again, those different departments or programs need to be consolidated, and that's going to fall on finance. Just another area where there needs to be a bridge between the different pieces of data, and that needs to happen on a recurring basis if you plan on doing a rolling forecast versus that static budget approach. Another item is that you may just not have access to a tool that enables you to do any type of budget to actual reporting. So if we were to go through the scenario of you using your organization relying on Excel, and maybe you do get through a 6-month reforecast. You go in, you go through your normal budgeting process, and you do an updated budget within Excel. But now, having the ability to do comparative analysis between your actuals and your budget for those first 6 months of the year, you're going to need a tool to do that. If you have your GL system, you could potentially plug your budget figures into that GL system, but then you have to hope that your GL system can maintain your original budget versus your reforecast, and then you also have to go through the effort of bringing that budget into your GL system. Or vice versa. You can take your actuals and plug them into your Excel model, but that brings a tremendous amount of complications as well. So the existence of a tool is usually another big hurdle to get past. And then last but not least, collaboration. The previous points touched on it slightly, but it ultimately being able to connect the dots between the different staff members that have some impact on the budget. The director of marketing and the director of IT, your programmatic staff, they have a lot to say about where you guys are trending as an organization through the year. So having those meetings with those individuals, going in and sending off emails to check in with them, getting templates back from them, all of that takes tremendous time, both on finance and on their plates. So, and once you get that detail, again, consolidating into a single budget that you can analyze is difficult. So all of these different pieces take up a tremendous amount of time. So it's difficult to bring it all together on a recurring basis and to keep up with something that's more than just a static budget. So now I'm going to talk about continuous planning. So the overall mindset for continuous planning is that your budget or forecast is going to shift as your organization does. The frequency at which that happens can vary from organization to organization. Some organizations may want to do this once per quarter. Others may want their staff in there on a monthly basis. It's really, you don't want to get more granular than is necessary for you. If management and your board are not analyzing the detail down to the month, then don't worry about going down to that frequency. It's just not worth the investment of time if it's not being utilized. The primary benefit of a rolling forecast is that the decision makers at your organization, they're going to have a clearer picture of reality as you progress through their fiscal year. If you had been relying on the original board-approved budget for several months, let's say that you were at the end of Q1 and you're relying on your budgeted figures through Q1 and then for the remainder of the year based on what you had agreed on at the beginning of the fiscal year, that's not going to align with what may have happened after the first quarter. You might not have received 100% of the grants that you originally budgeted for, so your funding is a bit lower than anticipated. Or maybe your annual trade show had 25% more attendees than you anticipated. So there's a lot of those adjustments that aren't being taken into account by your decision makers, so they are not able to make truly informed decisions on a timely basis unless they're diving into all these different systems and connecting the dots. So relying on a continuous budget that updates with those figures enables them to go in there and in one place look at, this is how my first quarter impacts the remaining 3 quarters, and that we need to make modifications in these different areas. Other examples could be related to the vacancy. If you had somebody leave and then your management and decision makers are able to see that, and they can also see that you overachieved in different funding areas, they may be able to make those staffing changes sooner rather than later, having, of course, a tremendous impact on the other staff members that are there, as well as picking up the areas that those vacant positions are responsible for. So the next question that I'd like to get into is, what's the value of a tool like Adaptive? The primary benefit of introducing a tool like Adaptive is going to be freeing up time for your teams. Not only your finance team, though they will feel the largest ROI, but also your other staff. Your department heads, your programmatic staff, all of them will also be tremendously impacted by the free up of time that Adaptive brings. What this also enables your staff to do is prioritize higher value tasks. And what I mean by higher value tasks is that rather than them confirming some formulas in Excel or tracking down individuals and emails to piece together all these different areas of detail, they're instead looking at the consolidated detail and analyzing it and taking a look at different trends, KPIs, where they need to make modifications or pivot through the year. Those higher value tasks are now able to be accomplished because they're not spending their time going in and tracking down the low value tasks, chasing down those items. That's where Adaptive is taking care of that for you. You're letting the system handle that and putting those value tasks as a higher priority for your staff members. Yep. So something to keep in mind along that same theme is that your staff is, of course, your most valuable resource. So regardless of the system that you put in place, that's not going to change. And that's why we want to put in a system like Adaptive that's going to make you more efficient and let them get more value in their day in what they're doing. I'd also started off by stating that for organizations, the biggest hurdle when it comes to a rolling forecast is going to be getting past those time-consuming items. And that's where, that's where Adaptive is going to come in and address those. A few examples are that Adaptive is able to integrate all those disparate systems that you have. So Adaptive functions as a hub. You can bring in your HRS detail for your personnel. You can bring in your GL system, all of your actuals. Also bring in anything from Salesforce, your CRM, any fundraising detail. It's all coming to one place. And once the fact that it's all feeding into a single database means that when you're analyzing it and reporting on it, it's all there for you to look at a holistic view of your organization. So all those previous points I had mentioned about when you're shifting from static to continuous and having to track down the different pieces and the level of effort that takes, that's where Adaptive provides the greatest value. It makes that far more efficient and streamlines the vast majority of it. In addition to the different systems, you of course have your different departments and entities, your different locations, however you break down your organization, you have different staff members handling different things, and they all have something to say about the budget. you're able to customize your adaptive system so that when your IT director goes in there, what he looks at, that template and how he budgets is going to be in line with how he looks at planning versus how marketing looks at planning, how sales, et cetera. And so you can have it customized to that view, the view of the individual that's putting in the detail. So it makes the most sense for them. And then the last piece is collaboration again. So adaptive is a cloud-based solution. You can have any number of users in the system at one time. It also offers tools such as workflow, process. You can put in notes to each other on the relevant detail. And you also can control who can see what, who's able to access one program versus another. So it makes it very easy for many remote staff members to consolidate, to all work together on a single document. So rather than emailing back and forth an Excel template or one version of a budget, you don't have to worry about that because you're able to maintain it in one centralized cloud-based solution. Next, I'm going to dive into Adaptive Insights and talk a bit more about exactly how Adaptive accomplishes those things. So let me switch my monitor over. All right, so right now I'm logged into Adaptive Insights, and what I'm on is the Discovery tab, which is the equivalent of dashboarding. And I'm also logged in as a program director. And in this case, I am the program director that manages our housing programs. This is just one example of a dashboard. You can have any number of them. In our case, we're going to isolate this specific dashboard and click right on that link there. All right, once this loads, you can see there's quite a bit of content here, various different components bringing in data. So a few things that I want to highlight before I dive into them is if I go up here and I hit this drop down, I get access to two other drop downs, one of which is this level. So how this works is it directly addresses the issue of consolidating departments and programs and different ways of looking at data. This hierarchy here, it's custom to your organization. It can be broken down by department, by program. In this case, I took my programs and I broke them down by the different regions. And then I also have an international section as well. If I scroll down here, you can see I have my departments. So I have my G&A, you can see management, finance, IT, etc. So right now I'm looking at total organization, but if I wanted to click on one of these subcategories, such as Northwest region, what it does is it just takes a second and it updates all the components within the system so that it's now showing me that more granular view of the organization. So rather than look at everything at a high level, at a summary level, if my role requires me to go to a more granular level, at one click of that dropdown, I can access that more granular level. That's driven by permissions, so your user can only see what your admins enable you to see. In my case, I have everything showing, but if I was related to only certain regions, I would only be able to select certain regions. In addition to that, I have this currency dropdown. Right now, this is all in US dollars, but if you had international offices and you wanted to run these components and look at the numeric values based on another currency pre-conversion, you can very easily do that. It takes about 2 clicks for you to just click that other currency, and it updates all the figures for you. I'm actually going to go back to the top level organization and just let these reload, and then collapse this. Now in the upper right, I have 2 other drop downs. One of which is this one here where it says Rolling Forecast 18. If I hit that drop down, you see several other options. I'm going to actually expand this what if scenario. So the different versions also enable us to easily toggle between the content I want to look at. If we were to take a look at our static budget, our board approved budget that's not going to change, I can simply click on this version and it's going to update the exact same dashboard for that detail. So if I wanted to hop into what my budget was before I began making any type of modifications, I could easily do that by simply changing that dropdown. Now I'm going to go back to the rolling forecast. Above that, you can also see that there's some what if scenarios. So if I wanted to play through some scenarios in which I get a grant that I am skeptical about it closing, or I am going to make some hires, open another location through the fiscal year, I can build those into some what if scenarios. and then see how that impacts my high-level components and metrics. I can also look at retroactive activity. So I hit this date drop-down that says October 18. I can simply change this to September 18, and I can look at the prior month. How did we finish up? I can look at the prior quarter, prior year, etc. It's very easy for me to jump between different dates, and I can also go as far back retroactively as you bring into the system. In this case, I can go all the way back to 2009. So rather than have to dig up some old files or go into another system, I can have it all in one place, and I can see it all consolidated in any period that I'd like. So now I'm going to collapse this. I'm going to take a look at some of these components. The first one I want to showcase is this one here, income. So you'll notice that there's a period through the end of March 18 that's in green, and then there's no green shading beyond that. You can also see if I hover over the line that it tells you the exact dollar value. What that green shading means is that through March 18, it's bringing in actual values. So that means that I have my GL system feeding into my adaptive system automatically. There's no need for my involvement at all. I simply turn it on, tell the system to push it over at whatever frequency I choose, and it'll flow through and then be available within my components. And it's consolidating the actuals through the end of March, and then the remainder of the year are my budget figures. So I can see how I'm trending over any period of time. I can also hit this drop down here to adjust the period of time that I'd like to look at. I'm looking at 1 year, 12 months, but I can elongate that to be a 24-month period. I can look at retroactivity. I can very easily adjust that. If I hop over to this component and I hit this expansion, just to make it a little bit larger, in here I can adjust the date as well, but I can also look at it on an annual basis. So if I wanted to analyze the programmatic expense breakdown across some of my sub-programs, because right now we're looking at the housing program, but within it I have my youth branch, I have international here, veteran services, etc. These are sub-programs to my housing program. I'm able to go in here and hover over any one of these slices within the pie chart, and I can see the exact dollar value. But I can also adjust it to take a look at that on an annual basis rather than individual months. And then you're going to see that that number jumped up to almost 5 million in the case of international. The charts are also interactive. So maybe I know that my international sub-program does not get treated the same way as my domestic programs. So what I can do is click on international, and then what it does is it removes it from the chart so that I have more accurate percentages based on purely my domestic programs, excluding international. And if I hit this X, it brings it right back. So it reverts back to the default. If you wanted to take these charts and pop them into a board packet or throw them into an email, you can simply hit download image, and it gives you a JPEG of that content as well, making it far easier to spread that through your organization. All right, next, I'm going to hop over into revenue and funding. These are sub-dashboards within the housing program dashboard. So as a program director, I come in here and I have these 4 key areas that I want to keep an eye on at a high level. And I can remain at a high level, or I can get into a more granular components, either or. But if I look at the revenue and funding tab in here, you'll notice that we have a few different examples of components. You can also see that here's the retroactivity all the way through 2014. Doesn't look like we had any for 2013. You can see the breakdown in that case of revenue over a trailing 5-year period. So it's very easy to bring in retroactive activity. You can also see in here, this is an example of some metrics and calculations. In this case, percentage of revenue that's made up by donations on a quarterly basis. So you can choose what metrics and ratios that you'd like to have set up as components in your dashboards. Next, we have membership. So in here, membership, I like to show because it's showing non-financial detail, whereas the previous 2 were mostly financial detail. This is an example of how you can have your CRM bring in your membership counts and detail right into Adaptive. Sorry. And you can create these components to have both financial and non-financial in one single dashboard. In this case, we have membership revenue, which is financial, and then membership count, which is a non-financial detail based on units. What you could also do is, if you click on this detail, is you can break down the level of granularity you're looking at within that component. So in my membership, I have 3.3 million members in 2017. So maybe I want to see, where are those members located? Just by clicking on that and clicking on location, it breaks it out by the different states that they're located in, and even international here. But what I can do is also, I can hover over it, I can see the exact number of members that are made up by that state. So if I click on that, I can also drill further into it. So I'm looking at by state, but within California, what is the occupation of those individuals? And it's going to keep on creating this flow of data. And then I can see there's quite a bit of veterinarians, and I also, for the most part, have other unknown. I need to update my database to account for those. If I keep clicking in, I can look at member years. And it just keeps on getting more and more granular, enabling you, and as a program director, you can go in and drill into the detail. And now keep in mind that this detail is feeding from a very different system than where the revenue is coming from. All of this is coming from different places and consolidating and adaptive in a single database, making it very easy at a high level to look at these types of details and through the years. So then you can make those informed decisions without having to go to whomever manages your membership and say, what were our membership counts and what is the amount by month? You don't have to worry about having that conversation. You can, at a couple clicks, have that data right in front of you. If I hit back, it's going to take us right back to the component. One last dashboard I want to showcase is the personnel dashboard. So in here, this is detail that would flow in from your HRIS, your payroll system. You can see things like the total FTEs as they trend over, in this case, a 5-year period. You have your actuals through 2017 in the system, and then you have budgeted in 2018. You can also do area charts where it's showing you, oh, it looks like we had a spike of new hires in May of 2017. We hired 55 new people, and then so that can spark some conversations about that and give you visibility to seasonality to some of your hiring throughout over X amount of years. You can also see the breakdown of your compensation by program. Just like before, you can hover over each one of these as well as omit some. But you can see, where are you investing the most in your staff? What programs have the highest personnel cost? And then you can also create a scorecard, which is down here. And the scorecard you can customize so that maybe you don't want to just look at personnel at a high level. You want to break it down into certain categories, your tax, how much you're spending on taxes, benefits, officers and directors for those programs. You can do that here. And then you can see, in this case, I'm doing 2018 budget versus 2017 actuals and doing a variance comparison, as well as a little micro chart within there. That can all be customized to whatever level of granularity you'd like to see. All right, so this was taking the approach of a program director that's at a very high level. How are we doing through the year? So whereas in the approach of taking a static budget and not having a tool like Adaptive at your disposal, you would have to have those conversations with your finance department to find what the financial detail is. You need to log into your GL system. You'd have to go talk to your fundraising staff or whoever manages your CRM to keep an eye on your membership. This bridges the gap between all of those systems and provides a single hub, a single database to look at all of it at that summary level. But now what we're going to do is we're going to segue into a more granular approach. So rather than keeping it at the high level, we're going to go in and talk about exactly what budget modifications can you make and how can you adjust your forecast. So I'm going to switch over here and go to this tab. So this is a statement of activities. You can see it's pretty straightforward statement of activities. Along the rows, you have your accounts, and then the columns, you have your date ranges. It looks and feels a lot like Excel. So it's a cellular-based approach to your budget, but you have a lot of different colors when it comes to the text. You have a few different columns that are in green, and then you have some text that are in black as well. And if you look at the headers up here, you can see that the dates are, in this case, this is FY17. Then we have FY18 broken out by month. The green text, just like that green background from the dashboard, represents your actuals. The actuals from your GL system that are flowing through and populating live in your budget. And again, just like before, you can see up top, we're in our reforecast. We're in our rolling forecast through the year. So I have the system set up to pull in my actuals each month as that month closes. And that enables me to more accurately look at, in this column here, FY18, how am I trending through the year, taking into account what's happened. And keep in mind, this is at a very high level. This is me looking at it purely on a GL by GL basis. But it's also enabling me to look at it specific to the level that applies to me. In this case, I'm in the Northwest region. But if I wanted to go in here and take a look at what the Northeast region does, or it looks like, I can simply change that drop down. Once this loads, you're going to notice the same exact template, but the numbers are different because they apply only to the Northeast region. And so what the system's doing is taking all of these subcategories and rolling them up all into the total organization. And you can run this at any stage in this hierarchy. So any efforts that had previously existed to take the different departments and consolidate them into one place, that's no longer an issue because it's all being consolidated naturally by the system. I'm actually going to go back into the Northwest region. As I mentioned before, those regions and the programs and departments, that's all permission drivers as well. So you can set on a per user basis who can access what. I simply have access to everything because my user is inactive. So within the Northwest region, you're also going to notice that there's only 12 months showing. So it's the current year, the current fiscal year. But what a lot of organizations do when it comes to reforecasting and rolling budgets is they extend beyond that 12-month period. Because if you were to, in a scenario where it's, let's say, the end of the third quarter, and you'd like for the staff to forecast what the updated Q4 numbers will be, so you have an accurate picture or closer to reality picture of what you're going to end the current fiscal year with, but then you also want them to begin budgeting for that next fiscal year. What you can do is you can adjust your version to be a 15-month period, or you could do a 2-year budget at any given time. You just simply change the settings within the version, and it gives the staff a single place, a single system and database to go in there and make those adjustments, and they can see how it impacts, you know, the following years and the entirety of that fiscal year where they're making their forecasting changes. So in this scenario, for today, we're just going to look at a 12-month fiscal year. But if I look at this, any one of these lines, let's say mailing services, you're going to see that the total is $8,300 for fiscal year 18. That's taking into account my first quarter actuals that are coming in from my GL system, and then it's putting in my budget figures that I had originally budgeted for and was approved by the board. What I can also do is, if I take a look at this $718 in January, maybe I thought that this number was a little high or a little low. I can right-click on this and hit drill into transactions. And what it's going to do is going to load up a second screen here. There's a little pop-up window, and it's going to tell me what's making up that number. It's actually bringing in the transactions from your GL system for those actuals. So you can have all the visibility you would normally need to go into your GL system to get in one place. And the level of granularity, what we're looking at here, this is customized by your administrators within Adaptive. So if you didn't want it to be this granular, you don't have to have it be this granular. You can bring in only certain GL codes and omit others. Maybe you don't want salary to be anything more than summary, things like that. So you can pick and choose what level of detail you want, but it brings in all of that detail into one place, relying on the integration between the two systems without having to go track it down elsewhere. Right, so if I go back in here, now looking at our mailing services, and I can see that the prior year was about $7,900, and this year I am trending in the direction of $8,300, assuming that I stick to my current budget. But I think that's low. I think it's going to be a bit higher. So what I can do is plug in that higher number right into the annual column. It's going to give me a few different options here. So I can just break this back evenly. And what it's going to do is it's going to adjust the remaining, in this case, 9 months. It's going to adjust it so that it then aligns the current year with that 9,000. The actuals won't change. It's assuming that these are set in stone. Your actuals cannot change. So now you're able to very easily reforecast for the year and the remaining months without the need to go in there and plug in each of the given months and without the need to update that first quarter at all. In addition to that, you can also plug in a number and you can break it back proportionate to the prior year. So because I'm bringing in actuals, I can hit break back proportionate, and now you can see that it spreads the numbers, and they vary from month to month. That's going to be based on the actuals from the prior year. So if you have some consistent seasonality year over year, the system allows for that, and it takes it into account. So you don't need to worry about replicating that seasonality. It'll do it for you. And then one last example that you can put in here is you can click on this assumption option, and you can do a few different non-financial metrics can drive how you spread that detail. You can have things like patient visits, families served. It would maybe popular in this case is working days per month. You can hit apply. Oops, sorry, I chose a number that was too low. Go back in there. Working days per month. So you can see it'll then put in the values based on the number of days that the office is open in that given month. So you have your occupancy expenses related to that, and there's no need for you to go in and figure out what those numbers are. The system does it for you. And what I'm also going to do is I'm going to plug in just one figure in there, and I'm going to hit save. That blue text in there just means I didn't save something, so I'm going to go in and plug in my data and then hit save. Now, this could be accessed by any number of users at any given time, so as far as collaboration goes, it really opens up the door for many people to get their hands on the budget and the reforecast and update what details in there. But something to keep in mind is, what if somebody changes something, and how do you know that it was changed? You have a few different options, one of which is this in the upper right. You can click and put in a sheet note, and then I can say, okay, 10, 11, 18, VG updated ABC. And then that's now a sheet note that somebody else can go in and take an eye or take a look at as soon as they get in there, and it tells them what you need it to. So you can set up an internal protocol as far as what level of detail. In addition to that, you can come in and you can right click on that 2000. You can put in what's called the cell note, just like you would in Excel. And you can say, this is higher because of trade show. And then hit save, and now it puts a little red triangle. It says that I made the update, and it's available for anybody else that goes into the system and takes a look at that. But what I can also do is I can right click on that cell, and I can do this explore cell option in here. It's going to open up another window, and then in here, this is what's called an audit trail. This exists through all the different cells, so you can always track down what's changed. So once this loads, you're going to notice that it keeps track of who made the change, the date, the exact minute that they made the change. Here's the user, what the old value was, and what the new value is. It tells you exactly what happened. And this will become a running list. So as more changes are made, you can track back to where it originally, what the value was. I can close that window now. In addition to that, what you can do is come in here and you can say advanced, I want to adjust this number. So the number right now is roughly 81,000, but I want to make this 2% higher. So now I just simply go in there and I've increased each of the remaining months by 2% using about 2 clicks of a button. So I can then increase my forecast for the year is now roughly 100,000 from the original value. You can also do that on an individual basis. I can just go in and hit adjust, and then you can increment this by 5%. It'll just increase that value by 5% on top of what it was. So you have a lot of different options to very easily make these updates on an ongoing basis. And as you make those updates in this continuous rolling forecast mindset, you're also updating the budget that your finance team is looking at, the consolidated budget, and also you're taking a look at this annual forecast is being updated as you're making these individual month changes. Okay. What you can also do is, I'm going to first save this, you can adjust the time period you're looking at. So right now I'm looking at 17, and then 18 is broken out by month. But if I wanted to, once this loads, I can change the display options, and I could include several months beyond that. And you can see I can go all the way back to 2014. This is just a setting to enable or disable certain periods. But if I wanted to just look at, for the 4-year period, how are the balances, how do they look? So you can see in here, here's 15, 16, 17, 18, all broken out side by side at the same level of granularity. I can also see in here that this was about 10.3, 10.5. We had a bit of a dip. So I think I over budgeted in this area. I can come in and just put that number right in there. I can say break it back evenly. And now I'm adjusting my forecast in FY18 to better align with where I think the year-over-year trend is going. So I go into display options. I'm going to shut these off. And what I'm going to do is turn on what's called a version comparison. So another scenario that comes up often is I need to see how much change has taken place between my original budget and my forecast. How in line are the two? So by using a version comparison, I can go right into this, and keep in mind that I'm doing this as a program director. So any one of your users can be enabled to go down the same path. But if I go in here, you're going to see a little key on the bottom. In gray, it's my rolling forecast, and then teal, it's my board-approved budget, side by side. So I can see you can see the bottom line, how the two look. I can also see on an individual GL basis how the two look again side by side. So it's very easy to include them both in one screen. Now, what I'd also like to do is shut off the comparison and show you what a spark line is. In this case, I'm just going to use the straight line and turn on FY18. These are all just display options. It's all the same detail. I'm just looking at it in different ways to make it very easy for you to update a continuous budget and have it all roll up into one consolidated view. So in here, you now gain access to this little trend line. You can see in green, these are your actuals. In orange, those are your budget figures. But if I go in here and I take a look at my printing and copying and I click on this, it's going to then make it a bit larger so I can see how I'm trending through the year. But what if I think that at the end of this month, which looks to be May, and if you hover over the number, it gives you the exact dollar value, I want to make this lower. But then I want to offset that by increasing the later in the year. Oop. There we go. Had to click right on that. So you can see I can make those changes simply by dragging the trend line. And down here, you can see that the number's changing, and it's changing the forecast for the year based on how I'm adjusting those dollars. I can hit close, and that'll be able to save. So you can also adjust your seasonality very easily just by simply moving around that trend line. Just another little shortcut if you needed to adjust how different expenses or revenue are going to flow through the year. Okay. So this is if I was a program director. Now I want to shift into what if I was the IT director. And I'm going to go over to this next tab here. And what we're looking at is an example of just a basic model, a model that's set up for somebody that works in IT that manages different assets, computers, keyboards, monitors, things like that. And what I'm able to do is customize this in any way that makes sense for them. So rather than that individual have to go and maintain a separate spreadsheet or put this on a pad of paper that they have on their desk, they don't need to do that any longer. They would simply put it into this one system, and then it'll already be available to your finance team, to your management, and your decision makers. All of this would then be already in consideration when it comes to your budget. So within here, you'll notice that I can tag these different assets to different levels. I can put in an asset tag for them. I can also put in the specific employee that's utilizing that asset. And then this is a drop down here with a few different options, some pretty generic IT-related asset tags. And I can put in a cost related to each of those items, as well as a useful life and an in-service date. And then I can even type in here, if I wanted to put in a note, you simply can type into those fields and give yourself the ability to manage that asset list in one place. Now, the benefit of this is that for IT, it's very straightforward. They're able to put in the detail in the way that makes sense for them. They know these things. And this is very common for them to maintain. And from a finance perspective, you have the details that your team would need. You have the ability to take a look at the cost You have the ability to look at the in-service date, so you can account for when do we need to put an outlay of cash to purchase those assets. What's the useful life? How do we calculate the depreciation related to them? You don't need to track down this detail from IT because they already put it into the system. And all you're doing is you're telling the system to formulate how it impacts the GL based on those details. And the details, of course, are coming from IT in a way that makes sense for them. Any number of these sheets can be set up, and they can be customized to look like and be modeled around the templates that make sense to each of the respective departments. Okay. The next thing I want to take a look at is the report writer within Adaptive. So I'm going to hop over this last tab. So in here, this is the reporting hub of Adaptive. And you'll notice there's a few different options when it comes to different folders. You can set up some personal reports or shared reports. What you can also do is add them to favorites in here. So if I hover over this navigation bar and I go to reports, I can actually click right into any one of my key reports that I find myself always going into. So it makes it very easy for me to get into those. In our case, I'm just going to click through in this folder here. But we're going to first take a look at average salary expense over a 3-year period. So when I run this report, very simple report. It's taking my head count, taking my salary expense, and then it's calculating average salaries, and it's breaking it down by the different levels within, or the different regions within my housing programs. And then it's showing me how it trends year over year. It's very easy for me to throw something like this together. It's bringing together financial and non-financial detail. That's the value of it. And it's also enabling you to create ratios and metrics based on that detail so that it's clearer how they interact with each other. Another example related to headcount is this headcount by region. You can also set up just one-off charts or graphs. So similar to what we saw on the dashboards, you can just do that as a single component or a chart rather than have to update your dashboard. In here, you can hover over this detail. It tells me that my headcount in the Midwest, it makes up 27.71% of my total headcount across these 4 regions. So, and you can customize this again to take all that detail and put it in the format that makes the most sense for whomever is going to consume the detail. Next, I want to take a look at membership by month. This is a bit of a more robust report. What this is doing is taking that membership detail that's in the system, which may have originated from something like Salesforce or your CRM system, and it's bringing it all together into a single report in Adaptive. If you look in here, it has FY16 and then FY17 is broken out, and it's showing you your total member count. It's breaking it down into different types of members, low income, affiliate, international, etc. And then it's giving you some metrics related to it. Not only the total number of members, you can see what your attrition rate is. There's some conditional highlighting, so if it's over 1%, it's going to be in red. Under is going to be in green text. You can see the net new members in any of those given periods, and then the revenue related to each one of them. What you can also do is, you can see down here, there's a little note. So if I go into this Notes tab and I hit Add Report Note, just like before, just like you can add a note on the sheets, you can add the notes to the reports. So if I want to leave a note for myself that I looked at one of these numbers and noticed it was high, I can just make a note that this month was a bit higher or a bit lower than anticipated because of this reason. So you can leave little footnotes for yourself for the future. And keep in mind, others can also see those notes if they can access the report. So you can also use it as a collaboration tool. And one last report I'd like to take a look at is Statement of Activities. So you're going to notice this looks very similar to the prior sheet that we were looking at. I also have the ability to set up some parameters or filters. So when you run the report, you can have it show the departments, the location, the time period, whatever you'd like to show. You can set up these filters. In this case, we're going to look at the Northwest region again, and then for my forecast. So when I look at this forecast, it looks very similar to the statement activities from before. But some added benefits of setting up a report like this is that you can scroll down here and you can put in some programmatic metrics. So in this case, I'm having the system put in a ratio or calculation for what's my fundraising efficiency ratio. I can also have it calculate what's the percentage of expenses that are made up by salary, by personnel in a given period. What's the percentage of revenue made up by salary in that same period? So you can put in any number of ratios to calculate based off of the detail that's coming in from the other areas within the system. I can also put in notes, but in addition to the notes for the report, I can also put in notes for the cells. So before, we had put in notes. Here's that $2,000 from the mailing services, and there's a little 4 next to it. So you can see here, this is higher because of the trade show, the exact cell note that we had put in before. So everything comes full circle. From the point of entry, that program director put in a cell note, that flows through to whomever is managing this report, looking at this report at a holistic view, and it'll bring in those same exact notes that they put in there, so you can easily collaborate between different departments, stages in the hierarchy of your organization, etc. You can also click on these numbers. They're all links. So if I click on this, it takes me into this area here, and then I can just click right on that statement of activities, and it's actually going to take me to the sheet that we were at before so that I can make any type of budget modifications without having to bounce around in the system. I can just, within 2 or 3 clicks, it's going to bring me right to that exact place we were before. I can make my adjustment. I think it's going to be 1,500 instead of 2,000. I would hit save, and then I've now updated my budget because at a holistic view, I felt that it needed to be modified in that period, and it all flows through. And you can also notice that within here, you can collapse these and drill down to the GL codes here, or look at it at a summary level, either or. These reports can also be emailed or printed, exported to PDF, etc. So very easy for you to get it out of the system and spread it with whomever needs to consume the detail. Right, so that's all that I planned on showing from a product perspective today. I hope that I showcased the value of a forecasting tool like Adaptive, the ability of the tool really being to enable your teams, your finance team, as well as your staff in general, your programmatic staff too, to get more visibility into your organization's health, not only from just looking at a static budget, but looking at it on an ongoing basis and bridging the gap between all these different systems, bringing in that HR detail from the GL, your budget versus actuals, all of that content, giving you the ability to do some true analytics on that on an ongoing basis without having to track it down. Okay. Missy, do we happen to have any questions come through in the chat box?
We do not. We do not as of right now, but if people have any questions, they can chat, and I am here to read them.
Okay, so should we just leave the call open for a couple more minutes to give people time, or?
Yeah, maybe 1 or 2 more minutes, see if anybody has any questions, and then if not, we will end the broadcast and send out a recording tomorrow.
Okay, perfect.
If you do have a question, remember that there is a questions feature on your toolbar for the GoToWebinar. You can just type that in and we will all see it and can answer it for you. All right, it looks like we have a question. It says, how does Adaptive Insights link to the base program?
So it's a cloud-based solution. There are 9 out of 10 times it has a pre-built connector. Popular integrations include, let's say, MIP, Intact. You can bring in NetSuite. Salesforce is also a very popular CRM that gets integrated. Those have pre-built connectors in which it's very drag and drop when it comes to the integration. They've made it very user-friendly to integrate those 2 systems. Rather than having to do any coding or anything very technical, you simply say A plus B equals C, and then that ends up into Adaptive. So that exists for the most part with any of the popular systems that you may use in your back office. But if there are others that aren't pre-built, they're able to do some custom integrations between the 2. So then it'll pull the data out of those systems into Adaptive at the frequency and level of detail that you predetermine.
All right, we have one more. Robin says, Razor's Edge or Counterpoint?
Razor's Edge, I have seen before. Counterpoint, I personally haven't worked with it, but if it isn't on the list, as I mentioned, you can always set up a custom integration between the two. And that again isn't overly technical. They simply reference any open APIs, or if it's an on-prem solution, they house it give access to your network, and then it pulls in that detail. So again, very user-friendly to bring in that detail.
Excellent, thank you. It looks like no one else has any questions, so we will go ahead and wrap this up. We want to thank everyone for joining us today, and hopefully you learned a thing or two, and we hope to see you on one of our next webinars, where you can find our schedule by going to the jmtconsulting.com and click on our events tab. Thank you, everyone, and have a good day.
Okay, thanks. Take care, everyone.